Your views on market performance today?
We have seen a lot of sideways movement the last few days. It's actually closed lower than it did on Friday, and yesterday was even lower. But I think the fact that the current interest rate environment is not conducive for equity investments, because with such high interest rates, people are looking at equities and thinking that bonds are a better deal because they're getting high returns from the bonds. So I think that's one factor that is playing out in the equities market. But more so, even if you look at the global markets, the last few days haven't been so good for global markets, because primarily of a fear of a double dip recession in the Western world. So I think there's a lot of noise coming in from the equities market, and investors are worried.
Tell us your opinions about the British-American IPO. Foreigners accounted for less than 0.3% of subscription. So the good news is that the retail investors are back. The bad news is that foreigners do dominate the market and would have really boosted subscription levels and valuations. So in effect, 60% uptake, is that a good figure or not a good figure?
I think if you look at the current market conditions and you consider that we are currently in a bear market, I think 60% is pretty good. And a lot of people expected lower performance based on the fact that we're in a bear market. However, the foreign participation was rather low. I think it came in at only 9 million shillings. And it shows that a lot of foreigners were concerned about the equities market in Kenya. And especially at the time that the subscription was going on, the shilling was facing some headwinds. And maybe that is what weighed down on foreign investors' participation. But it is encouraging to see such a strong retail investor participation. Right. And it shows that levels of disposable income in Kenya are currently high. And it shows that maybe the retail investors are coming back into the market.
Another stock that's being used as a barometer for current market conditions is TransCentury, because basically they came to market around the same time as British American. Now, what we do know is they're converting a portion of their corporate bonds into equity, so issuing more shares should dilute the value of existing shares for shareholders, but it did buoy the stock by about 75 cents. What do you make of TransCentury?
I think TransCentury is a long-term bet on the Kenyan and the general East African economy, because they're investing in physical infrastructure, manufacturing and industry. And if our economies are to do well, if the Kenyan economy is to do well, I think TransCentury will benefit, because the more people travel, the more goods are transited across our railways, then TransCentury is bound to benefit. However, the convertible bond program was more of an investor converting from fixed income to equity, and I think he just wants to, whoever was converting was looking for liquidity in the equities market that's not available in the bond market, in the convertible bond market.
Now, another sector that has continued to shine despite the bearish sentiment is that of the hospitality and service industry. And that reflects in the results that have come through from TPS, a 22.8% jump in pre-tax profits. Now, two things. We do know that last year there was a cash call as they were refurbishing some of their hotels and lodges in East Africa. Have they been able to recoup some of those investments?
Yeah, clearly from the results, it's clear that last year the investments in refurbishment and expansion, because they recently opened Lake Elementator Lodge in Naivasha, it is paying off. If you look at the top line growth in revenue, as well as the bottom line growth of 22% in pre-tax and 30% in after-tax profits. So clearly the investments are paying off. But most you have to consider that, as I mentioned, disposable incomes in East Africa are rising. And I think that's what accounted for the bulk of their growth, because the MD said that domestic tourism and East African corporate sector really is what accounted for the growth in profits. Right. So I think they're bound to do well. And if you consider the fact that they're expanding the Nairobi Serena Hotel, and they really have good value offerings for their clients in the East African tourism circuit.
Okay, you're quite optimistic about the way forward, but others would caution against that, saying, for instance, a lot of the tourism revenues comes from European tourists, and within the midst of austerity measures within the Eurozone, that should be concerned. And inflationary pressures in Kenya basically means that some of the supplies to the hotel business should become a lot more expensive, therefore disincentivizing people to travel domestically.
Yeah, that's true. That's a valuable point because indeed luxury such as travel and hospitality usually suffers fast when inflation is high. But Africa is a resilient market in terms of the European market because it's one of the low-cost tourist destinations for Europeans. So I don't think it will suffer as much as high-cost destinations. But in terms of the local tourism sector, indeed we could see that travel numbers are down and the hotel numbers, the occupancy rates are down. But you should also consider the fact that the company has a number of good offerings, and there is the July to October peak tourism season that really could boost the second half profits.
And very briefly, you spoke about better returns on the fixed income side, but everything that we've seen by way of the CBK raising the discount window rate so many times in the last week hasn't averted the cash crunch, hasn't helped to boost liquidity, may have eased a bit of pressure on the shilling, but at above 92 shillings, it's still a shilling under pressure.
I think the plan wasn't really to boost liquidity. The plan was to actually tighten liquidity so that the shilling can gain some ground against the dollar. And I think that is what we are seeing. And so far, I think so far so good because, I mean, if you talk to traders in banks, they'll tell you that it's really expensive now to have dollar positions, either short or long. And this is what you're seeing with the shilling. I think it will stabilize in terms of liquidity in the market, will stabilize because Q3 rains are expected in October, and that will lower inflationary expectations and thus improve yields on bonds. But also banks, I think, will improve their liquidity management and plan better rather than just run to the discount window for liquidity.